Talking about the S&P having seen the sharp rebound from the April lows, now up nearly 20%. My next guest sees that rally continuing, with the index rising to new highs in the second half of the year. Joining us now is Jim Paulsen, author of Paulsen Perspectives. Jim, there's a lot that has to happen between what Congress is going to do and what these tariff deadlines hold. Why are you optimistic?
Well, I think, John, that there's a lot of unpulled levers that could really be positive yet for the stock market. Even though this bull is now, 31 months old or whatever, there's a lot of things that we traditionally have used that we haven't yet used. And they're pretty much tied, I think, to Fed easing. Until last year, when the Fed eased for 3 months, this was the only bull market, which began in October 2022, in post-war history, that didn't have a period of Fed easing. Usually bulls start that way. We didn't get it. And that's why I think we've had a very narrow, concentrated market bull rather than a broad one. The 3 months that the Fed eased, John, the market went up 10%. It was good. But I think they're going to have to ease again. I think the economy's slowing down. And it could be Friday that tips the bucket if payroll's really weak, or it could take a couple more months. But I think the Fed's going to have to ease. And if they do, they open up a lot of positive force for the economy, provided we don't recess.
But doesn't it depend, Jim, on the reason why the Fed's easing? I mean, we're sort of in this, I'm not going to call it stagflation because we're a ways from that, but this stagflationary worry, right, that growth is slowing down because of uncertainty and prices could be heading up because of tariffs. If one of those things to the extreme forces the Fed's hand, might that not freak the market out?
It could. I mean, you're right, John. If we truly get tariff-related inflation in a big way and the Fed has to tighten into that, that's going to be very bad for the stock market. We'll probably return to those lows we saw earlier in the year. I don't think that's going to happen. I think the inflation story is overly exaggerated, and they're going to react, I think, to slow growth and be forced to ease. But if they do, it's going to bring a lot of things we haven't had. You get lower short rates, allow the bond yields to come down, allows money growth to speed up, which has been paltry throughout this bull. It causes the yield curve to steepen, which we haven't had. And finally, and maybe most importantly, I think it could finally raise confidence in this country. If the Fed got behind this and supported the market and the economy and showed that they're not going to allow a recession, I think confidence would rise. And boy, if you get rising confidence, just to give you that, if you look back to 1960, if I look at the confidence index every month it's gone up versus the months it's gone down. This S&P's gone up 16% annualized in rising months versus a little over 1% in falling months.
Well, Jim, for that confidence to happen, doesn't it all hinge on jobs? I mean, we've had some concerns about the consumer, but if jobs remain strong and the consumer can keep spending, but they've got to keep spending and jobs have to remain strong in the face of these AI questions and pressures and questions about whether overall growth, particularly in the second half, is going to slow down.
Yeah, I think growth is going to slow down, John. I think we're already around 2% growth. I think we're going to duck under that in the last half, and that's going to bring Fed ease, interest rate ease, if you will, money supply ease. And I think that is, we're going to get close to maybe 1.5% growth for the full year. But I think that will allow expectations about the future to climb, that the 2026 is going to be a better year for growth because we got monetary, interest rate, and fiscal support coming at it. And probably the tariff thing will die down as well. And I think the market will be looking ahead to that. I don't think we're going to have recession, and that is what ultimately will be the key. If we avoid recession, then I think this bull has a lot of legs left.